Hello Wolfpack, back at it again. Let's talk about Bitcoin today. And recently on Bitcoin, what we've done and what we've actually predicted, and this is on the last Bitcoin video we did, which is 48 hours ago now, we predicted, and we were all the way up here, right? We were about 21.4K off the top of my head. We said we're probably going to see something like an Adam and Eve formation, or an inverted Adam and Eve formation, which is a sharp triangular shaped head structure followed by a semicircle edging downwards. And we've started to rarely see that start to progress, and we've moved down almost 5%, upwards of 5% from the time of that video being posted. And so I would consider that to be a successful prediction at this point. That video was titled 17.5K is on the table, and 17.5K is definitely still on the table, right? So just moving towards targets as predicted by the TA here, because at the end of the day, what is an inverted Adam and Eve formation? Inverted Adam and Eve formation is basically a formation, as I said, where you see this mountain structure followed by this inverted, semicircle pattern, headed downwards. And what you actually do is you take a measured move from the neckline, which would be 19.7K, which is, coincidentally a major support zone, and you take it from the neckline to the top of the eve, which is the mountain, and you apply it to a breakout from the neckline. And so basically what we can assume, and this kind of goes with level trading, it's very simple TA actually, but it's very hard to identify for a person who doesn't necessarily know TA too well, which, by the way, it looks like half of crypto Twitter because no one's really picking up on this. What we can see is that if this breaks below 19.7K, which is the neckline of the structure, we will be heading towards 17.5K. Let me just do a diagram to kind of easily show you guys this. Right, so I've just drawn in the Eve and then the Atom, and you can see a break below the neckline at 19.7K would be an ideal opportunity for a potential short position there on Bitcoin, depending on how it's looking. Obviously, we can't say it at this point in time, but depending on how it's looking, that would be an ideal on-paper short position, and you'd be taking profits on that trade at around 17.5K, maybe a little bit higher if you want it to be conservative at the candle close, maybe 18K. But the point is, Adam and Eve formation, inverse Adam and Eve formation, very bearish formations forming on Bitcoin, and the volume's really lining up with it. I mean, on the upwards trend, if we look at the daily chart, for example, on the small upwards trend we have here, we had sharply decreasing volume over that 5 to 6 day period, which just suggests, and kind of recommends and tells us how, weak the bulls are right now, how weak the buyers are right now. No strength in that buying. No one is confident enough to be buying at these levels. And why is that? Well, it's quite simple, right? Although people out here are kind of shouting to a certain extent that the bottom is in, I would say it's very unlikely the bottom isn't in at this point. Now, I do admit that there's not much data on that fact. And why is that? Well, it's because our major macro bottom indicator, the 200-week SMA, which has predicted the bottom on Bitcoin on every occasion prior to this year, has been invalidated. And so that's the main piece of evidence we had for where the bottom would be. And so I can understand why people are scrambling to try and find out where the bottom is. But given the macro situation, I think we can all agree to a certain extent that it's quite unlikely that the bottom will be in here. Cost of living is rising, inflation is rising, interest rates are still pumping massively, the S&P is in a sharp downwards trend. All of these things are heavily connected, of course, and all of these things heavily affect Bitcoin. And it just seems unlikely at this point to think the bottom is in. And this is why I'm a believer in the 4-year cycle theory. The 4-year cycle theory suggests that the bottom will be in Q4. And I think that the macro situation suggests that the bottom will be in Q4 as well, or at least around that period of time. But at this point, I'm not overly trying to predict the bottom. I've made that very clear. I'm not necessarily too concerned about where the bottom is. I think the trend reversal is the main point we need to try to catch. I'm a trader. After all, traders don't just act on when they think the top is in or when they think the bottom is in. They act when there's confirmation that a new trend has reversed. A new trend has created itself and the old trend has been reversed. And that's when you buy in as a trader. And so that's where I'm focused on. But with that said, I think it's unlikely the bottom isn't at this point. But that inverted, Adam and Eve formation there is quite interesting. It does suggest we go downwards towards 17.5K at about a 70% chance. And that's because the formation hasn't played out yet. If it does play out, we would have about a 70% chance of going downwards towards 17.5K. It's playing out as expected here. We also have this ascending wedge formation into the formation, which is kind of structured it even better than it would be before. Nice little rounded top price action there, which is extremely bearish. And so at this point, I don't really see a reason to be bullish from a short term, and I don't necessarily see a reason to be bullish from a long term. The only reason I can be seeing right now, and I suppose this could be a reason to some people, is this macro uptrending line. Now, there is a macro uptrending line on Bitcoin. There's no denying that. This is the macro uptrending line. Until we lose that macro uptrending line, we are technically not justified in being overly bearish on Bitcoin. That's just how TA works. And so the macro uptrending line is sitting at around 18K. If we lose 18K, that would be a justification to be overly bearish again. At this point, we have to be considering the fact that this line is here, and we have to be considering the fact that it is currently holding for support. And so for that reason, I'm not overly concerned about where the macro bottom will be. I'm not overly bearish at this point in time because we do have macro support here. When we lose that macro support at 18K, which I think will happen, but we'll wait and see, I think that we'll be going downwards strongly towards our next support zone, which would be around 14K. And I think ultimately the bottom will be anywhere between 11K and 13.5K, right? I've said that over and over again. But again, it doesn't really matter to me where it is. I think it will become evidently clear when it starts to form. Now, that's the thing with macro bottoms you need to remember. And we'll get into the new content in a second, but that's the thing with macro bottoms you need to remember, right? They don't just come out of nowhere. The only time in history the macro bottom has just come out of nowhere and then it's gone 3 days later and you can't buy anymore is the COVID drop, and that was a black swan event. In 2015, you had 10 months to buy the macro bottom. In 2018, you had 4 months to buy the macro bottom. So don't be too stressed, right? There's going to be time, and as that time progresses and as the consolidation around that period happens, it's going to become more and more obvious where the macro bottom will be. But what we can identify now on the monthly chart is the fact that the macro bottom indicator on the monthly chart is actually stemming from this support line on the RSI at 44 on the RSI on the two last bottom occasions, which is 2018, 2019, and 2015. We actually saw 44 exactly on the RSI be retested, and we saw a sharp bounce off of 44 on the RSI. Now, the interesting thing about this is that the monthly candle closes in 48 hours exactly at the time of filming this video, maybe 47 by the time it gets out, and we are actually below 44, and we are sitting right here at 42, which means that indicator for the macro bottom has been lost as well. Now, there's two ways of looking at this. You can look at it and say, well, the monthly RSI is the lowest, most oversold level it's ever been at. This is a reason to buy. Or you can think the monthly RSI is the lowest, most oversold level it's been at. This is a reason to understand the macro situation is terrible and perhaps a reason to think the bottom is not in yet, right? Now, I would say the latter is the appropriate way to think about the situation. I'm getting a lot of people who are saying on Twitter, and particularly the bigger accounts who are obviously engagement hunting and not necessarily here for honest, true analysis, who are saying things like, the weekly RSI is most oversold it's seen in a certain amount of time. The monthly RSI is most oversold it's seen in a certain amount of time, etc., etc. We've seen the sharpest downtrend we've seen in a certain amount of time. We're so oversold right now, you should be buying. It's like, well, not necessarily, right? We're so oversold right now because we're in a bear market on the traditional markets, which has never happened in the entire price history of Bitcoin. We're in unique circumstances, and hence unique analysis needs to take place. What they're using methods of analysis that were typical if we were in a macro bull market on traditional markets. We're not in a macro bull market anymore. And so I'd say those methods of analysis are actually obsolete. I don't think they matter anymore. And I think that's the big problem the bigger analysts are making right now. It's a big trap a lot of people are falling into. TA is all well and good, but if you don't understand the macro situation, you can't actually apply the TA effectively. And so that's interesting, or the macro context, I should say. Now moving forward, and something I do want to talk about quite a lot here is the Bollinger Bands. Now, we are coming close, as per the Bollinger Bands, to a relatively large move, or should I say the next leg on Bitcoin, right? Let me bring it up here. What we can see, and it's very similar to what we saw in the last couple of months, is every time we see a sharp downwards trend on Bitcoin, and this is typical of the last couple of months, for example, we see the Bollinger Bands spread out, obviously as the price action kind of goes haywire, and then we see that compression on the Bollinger Bands, and then we see about a few weeks of compression, and then we see them spread out again as the price action goes volatile. Very typical stuff, right? You guys already know this, but the point is, when the Bollinger Bands compress, we have a high likelihood or a high chance for a big move on Bitcoin. The Bollinger Bands are sharply, they're not compressed yet, and they're nowhere near compressed actually, but they're converging towards each other quite quickly, which means that I would say, provided we have no significant price action, provided we don't move either above 23.8k or 17.5k, which by the way are the two significant levels, anything between that is just ranging and nothing changes, we will see compression on the Bollinger Bands, and provided we stay within the 17.5k to 23.8k price region for about a month, or a little bit in excess of a month, we're going to be seeing a big move brewing. It's like holding a beach ball under the water, right? The longer you hold it there or the deeper you push it down, the more compression that happens, which is relative to the chart. When you release, it might not only just come to the top, but it's also going to pop out a little bit. And that's what happens in crypto, right? So if you compress a chart down, if the price action compresses into a nice, neat little range for a long period of time, you're actually just building tension. And eventually when it does explode to the upside of a downside, depending on how long and how sharp that compression has been, it's going to lead to a bigger move in either direction or the preferred direction of which the breakout is going to be in, right? So that's interesting to consider as well. And that's something to keep an eye on. Now, another thing I'd be keeping an eye on the daily chart is this downtrending yellow line, and this is stemming from the 28th of March, and we can see that it acted very clearly as resistance on 3 occasions here throughout March to May, and it still is a valid resistance line that we need to be watching. If we do pop above that line, it would be interesting to see where Bitcoin goes. I think that if we do manage to get above that line, that would be confirmation. That would be heading up to around 28.6k, or even to the top of this rejection zone at 33k before rejecting downwards and faking out the market and doing something like that, right? So interesting stuff. There is a potential for another dead cat bounce here on Bitcoin, but the shorter term does suggest that we are a little bit bearish, that we should go down to around 17.5k. And that's obviously if we see the confirmation of a breakdown below 19.7k. And we're keeping an eye on all of this stuff. As for the total cryptocurrency market cap, just trending as usual, broke down from a major macro line and trending downwards massively, and probably going to be ending up at a bear market bottom of around $572 billion, right? That's what we're looking at. But again, macro predictions, a little bit iffy right now. We need more confirmation. You know, it's like trying to call the top months in advance. That's the way I see it right now. And that's why I find it so hard to do it, right? Because if this is the same thing as me sitting over here in September 2021 and trying to say, all right, the bottom's going to be in a few months. It's like, how am I meant to know where it's going to be? We need to wait until we get closer to the date of the bottom, and then we can start being more precise. At this point, all I can really say is it's probably not in, and it probably will be in around Q4, and it probably will be in around Q4 in the mid to low teens, right? The mid to low 10Ks, that, region, right? So 10 to 15K. That's what I'm looking at, 11 to 14K more precisely. But that's kind of it for Bitcoin, right? So shorter term, not looking too good. Inverted Adam and Eve formation, breakdown below 19.7k would lead to a 17.5k Bitcoin, which is obviously a retest of this low we placed on the 19th of June. Alternatively, if we break out above 21.9k, we'd be going to 23.8k. The two major regions you should be looking at on the medium term chart are 23.8 and 17.5. Breakdown below 17.5 would bring us to this green support box at 14 to 11, and a break above 23.8 would bring us to this yellow resistance line, which would be anywhere between 27 or 26, right? It sounds like a lot of if, buts, and ands, but just to clarify, I am bearish in the short term, I am bearish in the long term, but I do understand the fact that in the medium term, there could be sizable bounces. We could even go into the 30k region again, and that's the thing about bear markets, right? They're designed to kind of wig you out. They're designed to make you very, very confused, and they're very, very, very difficult to catch the macro bottom in, even for the most experienced traders. I'm going to tell you right now, it's quite unlikely that even myself will catch the macro bottom on Bitcoin. That's why I'm trying to catch the trend reversal. I'm not necessarily too concerned of the bottom, but we'll see what happens. Now, without further ado, in the video there, guys, thanks for watching. I do want to look at a few things before we end it off, though. So if you go to my YouTube channel and you click on the join button, you can gain access to Wolves of Crypto VIP membership via the YouTube channel. We'll post all the exclusive content in videos that only the VIP members can see. We've got Altcoin Trading Signals, exclusive access to my charts, 2-hour video on market psychology, and Prioritised reply to comments, as well as other stuff there, just for 28 USD a month, less than $1 a day. Not going to get much of a better price than that. And then we're looking at the Crypto Academy, which is a Become a Trader 10-unit course developed by myself and Mega Crypto. Basically a TA course, technical analysis course, putting in way more effort than other TA courses. We've actually got worksheets, and we've actually got kind of tasks and task books and a trading diary. All the other courses you're going to find are just going to chuck information at you and just hope you learn it. We're actually focused on letting our clients, letting our customers, letting our students, whatever you want to call them, actually learn the content so they can actually find trades effectively and trade effectively and competently in the future. Check out that at cryptoacademycourses@gmail.com, or just check out the website there. And then moving forward even further, with the VIP membership, you're going to be gaining access to BitGet. Not gaining access, but you should be using BitGet with the VIP membership. And even as a free member, even as someone who's just watching the channel casually here, BitGet Exchange is the one you should be using. That's the exchange I personally use, especially for futures. Why is that? Well, it's got half the fees of Binance, and Binance is most popularly known as the cheapest exchange. So obviously it's not, right? BitGet's the cheapest exchange here. Half the fees of Binance, non-KYC. You're looking at futures on around 56 pairs, developed by traders for traders, and that's what I like about BitGet. And if you sign up using my referral link below, you'll get access to an exclusive reward center and in which you can gain access to I think over $4,000 in rewards for completing some tasks there. So interesting stuff for sure. Use my referral link to sign up. That would be highly appreciated, in which you're supporting the channel there. So thanks for watching. Hope you enjoyed. I'll catch you in the video tomorrow, and have a good day. Cheers.